Hello everyone. Today we are taking a deep dive into this BBC News story, the companies making billions from the Iran war. We are going to break down exactly what is happening here and what it really means for your money. But before that, you are watching Let's Decode the News, where we take the biggest business and finance stories and decode them so anyone can understand. If you are not subscribed yet, hit that button right now. So let us get into it. As households across the globe count the costs of the US-Israel war in Iran, some companies have been counting bumper profits instead. And look, that one sentence is the whole story right there. While most people are feeling the squeeze, a handful of companies are having the best quarter of their lives. Same world, same crisis. Completely opposite outcomes depending on where you sit in the system. This is exactly why understanding how money moves during a crisis matters so much. Because it does not stop moving. It just changes direction. Now here is where things get uncomfortable. The uncertainty sparked by the conflict and Iran's effective closure of the Strait of Hormuz. Right, so, the Strait of Hormuz is not just a line on a map. It is the single most important energy choke point on the planet. When that route slows down, the entire global energy system feels it almost immediately. Most people hear about a conflict far away and think it has nothing to do with them. But energy does not care about distance. That disruption travels straight to your bills. And that leads directly to this, is driving up the cost of living and hitting the budgets of firms, families, and governments. So here is the thing. This is not abstract. This is your grocery run, your petrol, your heating. The chain reaction from one waterway lands directly in the wallets of ordinary people who never asked to be involved. And once you understand that connection, you start seeing these stories very differently. This is not just geopolitics. This is personal finance. Now here is the number that changed everything for me. BP's profits more than doubled to $3.2 billion for the first 3 months of the year, and honestly doubled in one quarter. Not from new oil fields, not from cutting costs. What changed was the price environment and the chaos surrounding it. Existing assets became dramatically more valuable almost overnight. Most people miss this completely. These profits did not come from building anything new. They came from instability itself. That is a very different kind of win. And then there is this, after what it called an exceptional performance in its trading division. Now think about what that actually means. BP's traders essentially profit from price swings. The bigger the swing, the better they do. Volatile markets are their bonus season. Calm markets are boring for them. So while households absorbed higher energy costs, BP's trading desk was on the right side of those exact same price moves. That is not luck. That is how these businesses are built. Here is where things get really interesting. Another international giant, Total Energies, saw its profits jump by almost a third to $5.4 billion in the first quarter of 2026. Okay, so almost a third. In one quarter. That is not a small bump. That is a company whose entire profit picture shifted because of market chaos halfway across the world. 3 major European oil companies, all reporting extraordinary quarters at the same time, tells you this is not a coincidence. It is a structural advantage built into how these firms operate. And here is what happened next, driven by volatility in oil and energy markets. And look, that word volatility is doing a lot of work in that sentence. Volatility sounds technical, but what it really means is uncertainty. And uncertainty, for companies with trading arms, is essentially free money. For regular investors, this is the key lesson. Volatility hurts retail portfolios. It feeds institutional ones. That gap is worth understanding. But here is the line that really stopped me. JP Morgan's trading arm made a record $11.6 billion of revenue in the first 3 months of 2026. So here is the thing. Record revenue. Not from loans, not from mortgages, from reading the chaos correctly. Banks with large trading desks do not need markets to go up. They just need markets to move. Fear is not a problem for these institutions. Fear is the product. And right now, fear is everywhere. And that feeds directly into this, helping the bank overall to its second biggest ever quarterly profit. And think about that for a moment. Second biggest ever. During a crisis that is hurting most businesses and squeezing every household simultaneously. Instability does not destroy wealth. It redirects it. Across all 6 major Wall Street banks combined, profits hit $47.7 billion in just 3 months. That number alone tells you everything about where the money went. Here is the part that puts everything in perspective. One firm that has been boosted is Florida-based Nextera Energy. And look at that, a renewables company showing up in a story about conflict profits. Nextera does not drill oil. So why is it surging? Because this conflict made energy independence feel financially urgent in a way that years of policy never quite managed. That shift from ideological argument to financial argument is enormous. Once investors start doing that math, things move fast. And they are already moving, which has seen shares surge by 17% so far this year as investors pile in on its mission. And honestly, 17% in a few months. Investors are not buying this on principle. They are buying it because the numbers now make sense in a way they did not before. Solar panel sales in the UK jumped 50% since February. That is not a trend. That is a signal. When consumer behavior and investor behavior move in the same direction at the same time, something structural is shifting. That is exactly where my take comes in. But real quick before I give you my take, this video is for educational purposes only, not financial advice. Always do your own research before making any investment decisions. So here is what concerns me. The companies winning right now are winning because the world is unstable. Those profits are measurements of disruption, not real growth. Chasing them is a short game. What is being ignored is the quiet rotation happening underneath all of this. Renewables and clean energy are gaining momentum not because of politics, but because petrol prices just got painfully real for millions of people at once. That kind of shift tends to stick. The question worth asking yourself is not which oil company had the best quarter. It is whether you are even slightly positioned for where energy is heading over the next 10 years. If you found this useful, like this video and subscribe so you never miss a breakdown like this. It genuinely helps the channel keep going. And I want to hear from you in the comments. Do you think this conflict will actually accelerate the clean energy shift long term, or will everything snap back once things settle? Drop your honest take below.